All right, now some major development coming in. Rupee continues its downward rally on Monday, falling to an all-time low of 90.58 against the US dollar. Viewers, this marks the second straight week of record lows after the rupee touched 90.55 on Friday. The currency at this point is under pressure from multiple headwinds. Delays in a US trade deal, weak capital inflows and also the widening trade deficit is what we're looking at. So far this year, the rupee has fallen over 5%, making it the third worst performing currency among 31 major global currencies, only behind Turkish and Argentinian currency. Now, this sharp fall comes despite the fact that dollar index weakened by more than 7%, highlighting the domestic pressure also weighing in on the rupee. Now, my colleague Karthik Malhotra is joining me from the newsroom on this. Karthik, help us put this into perspective. Rupee is continuing its downward rally and now it's touched an all-time low of 90.58 against the US dollar.
Right, Ishita. So it's in fact the third day that the rupee has touched this lifetime low. In fact, the day it breached that 90 rupees, and since then the slide continues to go and nobody's really been able to arrest it. Now, it's important to understand what's really happening here, and what is in fact happening is that it's a chicken and egg situation. FPIs are exiting their investments in India at a time when this year alone, 2025, has seen as much as over 1,50,000 crore rupees of FPI exits. Now, some say that FPIs are exiting because they're not getting dollar returns of being invested here in India because of the sliding rupee. But then every time that they're pulling out cash, the rupee gets more under pressure and it continues to fall a little more. So it primarily is a function of foreign investors who are exiting their positions on the Indian equity market as well as the Indian bond market, which is putting this rupee in this sort of downward spiral that we are seeing right now. Now, what used to happen till about a year and a half, 2 years ago was that RBI used to intervene very aggressively by selling US dollars in the open market and strengthening the rupee. But that is something which the RBI is not really doing anymore at the moment, maybe holding on to that US dollar reserve which it has in its stashes, or maybe letting the rupee find its own value. Because understand, we still don't have any headway, so to speak, on the India-US trade deal. And in the absence of that trade deal, even foreign investors are sitting on the fence, a little confused on how much they should invest, when they should invest in the Indian market, and taking all the profits available on the table right now and really waiting for the trade deal to happen. So RBI also in wait and watch mode, from what we understand, and exactly the same situation with foreign investors. They all just need some clarity on the India-US trade deal.